for acceptance. And in a similar fashion, the space sector, the only difference I personally feel initially is that unlike aerospace and defense, where Indian companies were trying to first address the opportunity from the Indian market's point of view, catering to DRDO labs or the defense PSUs. In the space sector, I feel Indian companies have a global opportunity, and that's something which is remarkable as compared to aerospace and defense. With that, I would like to first request Akshant to share some of the thoughts on how the policy intervention has been on kind of incentivizing investments on the infrastructure side, as well as touch upon what are the different options that one should consider when investing in this space, particularly for larger projects, mid to large projects. Actually, if you would like to throw some light.
Good afternoon, everyone. I am Johri. I represent IIFCL, one of India's largest financial institutions. We are also transaction advisors to New Space India Limited and Department of Space. My primary role is to structure B2B projects. Thank you, Mr. Doshi, for this introduction, and I would like to thank you all, and especially thanks to SIA for hosting this event. As far as the space sector is concerned, I think the last 5 years, India has seen a major boom, especially in the startup race. And since Chandrayaan 3 and since ISRO became the main enabler, I think India is now rising in the sunrise sectors and deep tech sectors, and rightly so. As far as incentivizations are concerned, I think the Indian space policy was the first initiative that we took within space. It was the first thing that allowed, Indian space sectors to politicize themselves and aggregate as a major sector. We've started with LVM3, GSLV, India's largest rocket, PPP, which was done by IIFCL in 2023. You are all aware of the privatization that happened with SSLV going to HAL. And we are very soon going to close the Earth observation satellite RFP, which is there in space. So a lot of initiatives, a lot of financial incentives are being built. And we look forward to this exciting session.
Akshant, just picking up from what you said, this is in terms of investment, when it comes to a starting point, I know a lot of startups which are still at a very early stage. Now, debt perhaps comes in a little later, when you have a product market fit and you want to scale up, you want to optimize your equity, not dilute it, and then go for debt, when you have operating cash flows coming in. But before that, as a company which is focused on innovation, a startup is basically looking at, and I'm not looking to focus only on startups, there are many companies which are mid to large scale as well. But the challenge for funding typically comes in more on an early stage. As you try to grow and as you grow with your revenues coming in, I think investors try to reach out to you more than the other way around. So from that point of view, I would like to request Manan also to talk about how they evaluate those startups, what are the kind of criteria that they look at. And I have one interesting question to ask you, but we'll probably park it for now.
Sure. So, hi everyone, I'm Manan and I'm part of GROWX Ventures. We are a deep tech focused venture capital fund outside of Gurgaon. And we've been investing in space technology for more than half a decade. Our first ever investment in space tech was in a company called Galactic Aerospace. They are making propulsion systems for satellite to navigate in space. And our other investment was in a company called Space Technology, a hyperspectral imagery services provider. Practically the poster boy of India's space tech story. And space tech is something that is very close to our heart. And given our credits, we do look at the entire spectrum of space tech innovation in the country. And over this journey, what we have realized that like any other startup, space tech is also only about the founders. Great founders make great companies, and that's true even for space technology. Now, if you get the first principles right, if you are backing the right founders, you can rely on their judgment that smart founders will identify smart gaps in the market and try to solve for them in a smart way. Things align on their own. So while from the outside it may appear that as VCs we are some kind of a secret model or a formula, I'm sure Girish here would agree with me, but black magic, of course. But at the end of the day, we are just identifying the talent and nothing more than that. And if you get that right, everything else will fall in line. That I know, it's not the answer that people must be expecting, but that's actually the truth. I hope that answers the question.
Thanks, man. Just a follow-up question. Do you necessarily look at companies when they are raising capital from you, let's say pitching to you? Do you look at the product market fit being for a global market, or is it okay if it is only for the Indian market as well?
So, the reality is that space tech, by the very nature of it, is globally in its approach. You may consider India as your starting point, but this can never be an India-only problem that you are trying to solve for. It has to be, and it is, a global problem that all of the space tech startups are trying to solve for. Space-based communication is a global challenge. It's a challenge for humanity, not just for India. At times, space tech startups don't even consider India as their primary market. It's just that policy is favorable, talent is available, capital is available. So you start off from India and then reach for the world. So that's actually the reality.
Thank you. Just moving on, Girish, I'd like to discuss upon two things. You have evaluated a lot of companies in the last decade, deep tech companies, and I think the quantum of companies that you have evaluated, I think very few people would have looked at so many companies, close to 25,000 companies, and that's a lot. Just in terms of the core criteria, is it, as you said, is there a black magic involved in terms of identifying? Or is it something which you set out the criteria saying, okay, first let's look at the management, look at the product market fit, what they're addressing, what's the problem statement that they're trying to solve for? And in that context, as Manan said, Indian companies may not necessarily be approaching the market, particularly in the space tech, as for the Indian market. How do you look at their valuation of their product from an international market opportunity point of view?
So as Manan said, the stage at which we come in is typically, especially on the space tech side, is typically being product leaders. The revenue on the space tech side, the private side is just started to come, right? So when Manan wrote the first check in the lab place, there were 3 product leaders. It was just an idea, okay? And therefore there is nothing tangible to look at except the founding teams, profiles, their tenacity, their complementarity of skills, and their uniformity of etc. So it's all about people analysis. And we as a firm, for example, have a full-time delivery partner whose only job is to evaluate teams, evaluate founders, help them build organization, culture, etc. Because that's what moves the needle that we are at stage. Having said that, I think the evaluation criteria after the founder fit is established moves around the largeness of the opportunity. What is the core intellectual property? Because at the end of the day, there's a lot of stuff happening out there, correct? And because this is, cutting-edge technology, leading edge technology, you have to ensure that there is core intellectual property. Because at the end of the day, as an investor, even if the company does not scale the way they are expected to, if they have an intellectual property, there is still some value that is on the table for somebody to come into a strategic acquisition. Okay? So for us, the core IP that is being created after the founding period, that becomes extremely important. And the disproportionate focus is on evaluating that IP, ensuring that that IP is tenable, it is protectable, and if that means that you have to file for the patents or PCTs early enough, so be it. Sure. So that's how you kind of then take it. As Manan said, the opportunity is fairly large. Correct? India is a shallow market. for most of the B2B products in the industry. Right? So you have to use the labor arbitrage, they are calling, to build better, cheaper, more efficiently. But you have to build for the world. So if you're not focused on building a world-class product from day one, you will not make it. Does that answer your question?
Yeah, it definitely helps. There's also this question that most companies talk about, at least at an early stage, that you have to be having a cutting edge technology, it has to be innovation driven, it has to be something which is very differentiated. But I also see that those who chase that, it is a long gestation period. Sometimes it wears out the promoters themselves. Capital may still be available, but sometimes you just get tired of chasing that goal. And in that process, is it a play only on technology, or Manan, do you see opportunities which are outside of technology also? It could be a service, it could be something which is more manufacturing oriented. It may not necessarily be only innovation or technology changing kind of a disruptive technology kind of a company. Or do you see that as a necessity, or it can be other way as well?
So, the foremost criteria outside of the founding team for us is realism. How realistic the problem is, and can it be solved with the given resources? That's the biggest question for us as a fund manager, as a venture capitalist. It's the core of what we do. Whether it's the time for us to solve this problem, or if we just throw money after it, it's just going to create a product that no one wants, or a service that no one wants. We have invested across both services and hardware companies.
Could you, for the audience benefit, share any examples of where you are invested in companies in the services side?
So Pixel is a services play. While they may have their own satellites in space, they sell that data that they collect from satellites, and not the satellites as a product. It's a services play. Bellatrix is a hardware play. They sell propulsion systems. They are coming into services as well, but it's primarily a hardware play. And in both these spaces, the need in the market is key for us. So while we, during our diligence, which is the core responsibility of us as a VC, we may look at a lot of things, including the realism of the problem, need for it to be solved, how we are looking to solve it. But at the end of the day, it's business that's the sense of business that's gonna drive our investments in a company.
So how realistic is the business plan? How realistic is
Exactly, that's actually the primary thing that we are looking to evaluate. How important and how significant is the problem, and how realistically can it be solved? Because there are, we were just, before this session, we were just discussing this, that there are so many startups out there in space tech that are looking to solve for things that no one wants. Just innovating for the sake of innovation is never gonna, give you the returns or the success that you're looking for.
It's more like the founders trying to chase this passion.
Exactly, more like a glorified science project.
That's right. Okay. Just moving on to Akshant, this one key question which I wanted to ask is, because this session is not only for startups, it's also about foreign partners coming to India. Now, from your point of view, from the space overview that you get, what do you see? Do you see foreign companies trying to come to India for partnerships, or is it only like they are trying to, Indian companies are trying to just go for technology trials?
I think it's very important that foreign companies participate in India. We have a Make in India program. It's essential for India to grow. I think there was a question in your, can I jump to that question? The geopolitical question, if that's okay with you. I won't break the flow, but since you talk about the geopolitical world which we are living in and we are constantly challenged by, thanks to Trump and his first party, we have to also look at things from the perspective of, where does India fall into this picture? There has been a constant thought process in India that we don't fall into a block, we are independent, we are growing, but I think it's time to look at, falling in different blocks. Because India inherently needs technology transfer. We need transfer of technology to be able to grow. I am all for Atmanirbhar Bharat and the fact that indigenization is the key. But you can't force indigenization down our institutions. And saying that we need to be 70% indigenized in the first 2 years, 3 years is a very tall order. That will happen eventually over a period of time. That's the first part of what I really want to ask you. As far as project finance is concerned, because I can only speak from a project finance and debt perspective, I think international partnerships are allowed so long as they are ready to invest in India and form joint ventures with our Indian organizations. If you look at the EO PPP RFP that we have prepared, we are technology partners now. And there are players which are which have international investors like Pixel, for example. Pixel is one of our best bidders along with Satshore and Dhruva. So these are organizations who are funded from outside. We are all aware that FDI is allowed, automatic move FDI has now been allowed into space. So international organization, international capital is a must to grow, but you cannot be on the Starlink model thinking that every technology will be having a remote control sitting in the United States and India will still give you money. You have to come here, you have to build.
That's an important point you're raising. That's technology is the core, but at the same time, geopolitics, particularly in the last few years, things are changing rapidly. I'll just share a quick example here. We have been working on a deal for an Indian company in defense electronics, trying to acquire a French company. They do subsystems, they do PCBs and they do subsystems. Interestingly, the Indian company is backed by a global private equity fund. And you don't believe it, but after a lot of time, after almost 3 months, the French company came back and told us in a very candid conversation saying that, look, tell the private equity fund to first acquire us, and we will acquire the Indian company, but not the other way around. They don't want a French company catering to sensitive projects there, and the information of that company to go to the Indian company as a parent company. These are the realities of the world that we are living in. Unfortunately, a lot of places we see acceptance of Indian companies coming in as investing strategically, but there are a lot of places still where the resistance is still there. Particularly when it comes to companies which are catering to aerospace and defense companies, particularly on the defense side. This is the same experience we are having. Unfortunately, we don't know the result, but it's the same thing that we are experiencing with the German company now. They want the private equity investors to be directly holding them, but not through the Indian. These are challenges that we'll have to, I think, overcome as we go along. Just moving back to Manan on one point, the key challenge that we see family offices also, as an investment bank, we see a lot of family offices talking to us. This pre-COVID, aerospace and defense companies had a lot of challenge. I have multiple companies which are now listed at hefty valuations, but those were let me put it this way, between 2018 to 2025, those companies would have been maybe 1/20th or maybe less than that of the valuation. And they're still struggling to get funded at that point of time. Today, because those companies have gone maybe at a very lofty valuation today, family offices, early stage investors are looking at space tech sector as a sector where they feel that it could kind of replicate the success on the aerospace and defense side. We tend to caution that it's not necessarily true because aerospace and defense companies have a long lead time in terms of product development, and the Indian government has really pushed the digitalization sourcing as well. On the space side, do you see a lot of interest coming in from family offices as well, investing in your fund as well as directly into companies?
So the short answer is yes. Everyone wants a piece of the pie. And this is across the spectrum, be it services or hardware thing. They want a piece of the pie for everything. And talking about lofty valuations, you're right there as well. Right from seed to maybe a growth stage fundraise, valuations have skyrocketed for sure. But at the same time, it's not totally uncalled for. I mean, there is still sense in the numbers that founders are asking for, because the market is developing for this. Back in 2018-19, the pre-COVID era Johri was talking about, these regulatory challenges were such that no one knew what's going to become of this entire industry. I see that same thing happening in defense tech today. But we have crossed that hurdle. The 2023 policy, government announcing a special fund for space tech startups, for a fund of funds for VCs to take capital and invest in these startups. We have come a long way. There is a lot of work that needs to be done for sure, but the market has opened up. The world is the playfield for all these startups now, and that's actually what is driving the valuation. It's a sentiment thing, but I don't think that it's completely baseless. There is something backing this moment.
Girish, from your experience of having worked at so many companies, could you throw some maybe examples of sectors or subsegments where you feel Indian companies are inherently a stronger advantage as compared to others?
So I think if you look at how this entire deep tech piece has evolved in India over the last 7-8 years, it's on the back of a demographic which is smart, English-speaking India. The same demographic will the entire IT services play from 90s, early 90s to the 2020s, to create $1 trillion of wealth. And in 2016-17, we realized that there was an underlying shift happening in the ecosystem where the same demographic was now either productizing some services or actually working on IP-led products out of India. And that labor arbitrage play that we see in the services it today definitely exists in the product and IP space as well. So if we are co-investors in a company, what that guy has been able to do with $4 million would have taken $50 million if he wasn't the value. So that's the value that we can literally put on the table from day one. So this entire exposure or kickstart of the space sector has been essentially backed by Asst brand. Some of these people have worked with ISRO, come out of it, from IIFCL, with other space agencies in the world. We are investing in I work with the space agency. There's somebody who's worked with NASA and then came back and started something. So there is clearly an opportunity to build across the spectrum. Okay? Whether it is a launch vehicle, whether it is satellite, propulsion, analytics, payloads. We look at companies which are trying to say we will build an MRO for satellites in space. Day before yesterday, I saw a company which was saying we will build a self-sufficient hydroponic and aquaponic play so that you don't need to carry food from Earth. So there's a lot of stuff happening out there. And it's not going to stop. I think we've crossed that hump where now the momentum is only going to pick up, and the government, the kind of what the government is doing, the kind of tailwinds we have with respect to capital, with respect to policy, I think all that is only going to add to it.
Just one question in terms of the opportunity itself. Is it largely still being driven by government, or is it?
No, not at all. Some of these found clearly there is a dual use to a lot of stuff that is being done out there, right? You can use it for defense, you can use it for national interest, but there is also a commercial angle. And as VCs, it is not easy to back a company which is exposed to a concentration risk of a buyer. In this case, in the government, the largest buyer for defense technology, because you cannot sell to anybody else in this country. So the interest is across the board. There is clearly private sector looking at opportunities, and the government is adding its weight for some of those technology development, innovation, the PLI schemes that they're doing. They have, last I saw there was 39 or 40 schemes of government where they were giving grants between 5 lakhs and 50 crores. So there is clearly a push from the regulatory, from the government side to kind of make sure that the ecosystem kind of starts to move.
Just one question on the cross-border side. In fact, just before lunch, the session that was there here was the Indo-Hungary session on joint partnerships. And interestingly, one company was talking to me and said, no, the valuations in Indian capital markets are so high, right? What do you see an opportunity for us to flip and be seen as an Indian company and then having operations abroad? Interesting. There was a time that Indian companies were trying to acquire companies abroad. This is the other way around. Do you see increasing interest from global companies to seek partnerships in India?
Well, I don't know if I'm the right person to answer that question, but yes, I do see a lot of interest. I mean, Pixel is a clear example of it. Google is investing in them. There are lots of other companies, I think, which are coming up with unique IP, Galaxy being one of them. So there are, organizations which have a unique technology or which have a unique user case, which are coming up. I think both Manan and Sir are better to answer that. But since you asked that question, I think we also need to make sure that a dual use case comes in more aggressively in India. And for that, I am talking as a lender. I don't look at valuation how VCs and PEs look at valuation. Because their valuations are based on market multiples, which there are none. We can't do a cost approach here. We do an income approach, right? So basically fundamentals of valuation. And on a discounted cash flow, you can show whatever numbers you want. I am only concerned about the analyzed returns I am getting on my interest. I don't have crazy expectations which VCs and PEs have, and rightly so. They take a lot more risk than we do. For me, it's important that projects are conceived and order book. You should have an order book which is of long gestation, at least 15 to 20 years. And we can't do project finance in this country or invest in this country, whether it's international or otherwise, if there is no blended financing. Typical loan structuring cannot happen.
But in the space sector itself, you see companies reaching that maturity where they are kind of investable from a debt point of view?
Absolutely. I think once the Earth Observation PPP project, the winner is declared, I am sure they will require some kind of debt. And in fact, we have made a case to the bidders that, debt is cheaper than equity if you think about it. It's somewhere between 9 to 12%. The interest is tax deductible. And if the project has long gestation and the government is a buyer, you have assured revenue coming on the other side. In our bid, we have given 350 crores maximum cap of interest-free loan, which is a flexi loan, which in itself is, if you look at it, a grant. You can pay it up in annualized form, you can pay it up after 12 years or 13 years in a lump sum. We are not charging any interest. So some kind of blended finance is coming in, and this is how you can structure the game. And like I said, the government has to be a buyer. The government needs to step in, they need to create demand. And that's the only way that gets into it.
Just in terms of convergence, there is defense, aerospace, space. Many investors, when we speak to, they kind of converge these things into one bucket. Right? It's not necessarily true. But when you look at people who are particularly family offices, or sometimes even while there is a lot of awareness in the VC community, I have seen, when it comes to the PE guys, right? This is still a little early for them in terms of the scale of companies which are to be investable. Do you see that kind of turning point very close to now, or is it still a couple of years away in terms of companies investable from a PE point of view? Let's talk about maybe 25-30 million kind of raise. There are a couple of companies which have done that. But do you see more companies coming of age and being investable from that point of view?
Right, so I'll break it into two buckets. It's like family offices and private equities. Right. So family offices, every FO has their own thesis, their own risk appetite, and the ability to write check and take that risk. Right. So that's very subjective all across the globe, in India and abroad. But in private equity, the tide is turning. We are seeing interest in startups that have managed to create a commercialized product and have a strong order. Sure. While they may not be able to show the numbers on their P&L at this moment, but a committed order book also does the job well. So, at some level, if you want to, let's just dial back a little. Private equities are essentially underwriting your P&L, right? VCs, we are underwriting the technology. There has to be a bridging of this gap at some level. VCs need to push the startups to think more from a commercial angle, whereas private equity, if they want a piece of the pie, they have to take a little bit more risk than they are traditionally accustomed to. And we see that bridge happening. Look at, again, Akshant, Pixel. GIC of Singapore has invested in. Yeah, it's a classic sovereign wealth fund going after cash cows of the world, investing in Pixel, all based on the order book that they have built. So, if you want to enter that game, you need to play by its rules at some level, or you just miss the bus. So there is a bridging of that gap happening. It will take a few more years for this to become the norm and be acceptable, and maybe even funds would agree, as fund managers are also problem identifiers. We are doing it for a different set of people. There will be some fund managers in future that will identify this funding gap and will come up with a thesis to back such startups.
As a matter of fact, we are seeing a keen amount of interest. Like we are seeing back in 2021-22 with the public guys and aerospace defense. Now we are seeing that they are asking for opportunities, what's happening in the space sector. We like to speak to somebody who is an expert. I think the first turning point for them is to understand the sector. Get the overall map and then identify where the companies where they can invest. But that we are seeing, in fact, in many ways I correlate the interest in 21-22 in aerospace and defense towards the map happening on the space race. Just one other thing, Girish, from when you look at investing in companies, one common occurrence that we have seen is that because of geopolitics or let's say sensitivity from companies which are funded or projects which are funded by the government abroad, do they see Indian companies as acceptable in terms of let's say privacy, data sensitivity or sensitivity of the project itself? Or is there any stumbling block to say, okay, you are an Indian company, you're a great company, but nonetheless on this project we will continue to work with companies that are from our home country?
I don't remember any specific instance, but there is a flip side. The flip side is that if you raise institutional capital, especially from endowment funds or from large sovereign wealth funds, etc., there is always a negative list that they work with. So typically, if you are a defense company, and if I have raised money from one of these institutions, the chances that I will be allowed to write a check in a pure defense company will be literally zero, because it will not pass the ESG muster. So a lot of this today, there is a lot of focus on ESG, on climate, etc. And that kind of actually becomes a constraint when you are looking at a pure defense tech. Because there are absolutely clearly articulated exclusions. You can't do weapons, you can't do drone, you can't do missile systems, you can't do etc. And therefore, as a VC, if I have taken that capital, then I express this out. But coming back to your specific question, we've not seen anybody specifically pointing to it saying that in this technology we will not invest in India, we will invest in companies which are necessarily that has not happened.
And the other way around, Indian companies getting access to markets here and there.
That has happened, and that continues to happen. Pixel, case in point, etc. And we have a company called Investt. 85% of this, 40, 50 billion order book today is overseas. And he's still at a PI 5, 6. So there is clearly an interest, as I said, because there is clear innovation and patented work, IP-led work happening. There is definite interest from other parts of the world, and it's happening at a cost price which is probably 1/5 or 1/10 of what it would be in their geographies. At the end of the day, everybody wants to make money. The only way to make money is either increase your revenue or reduce your cost. That's the only wedge that you have to play with. So if I can by adopting a technology which is not necessarily in my own country, reduce the cost of launch from for $1,000 a kilogram to $800 a kilogram, I would have.
True. In fact, when we first started working with Israeli companies back in 2014, I'd gone there and we saw a shop floor person getting about 4,000 USD per month. And as then they would come to Bangalore, they would come to other cities and see the kind of cost for arbitrage. That was actually the first turning point. Second was offset the offsets, and then another thing took off from there. Akshant, just to ask one question, which is space tech particularly. This is a long gestation kind of an industry in terms of proving credentials and getting success. How do you, as a lender on the debt side, evaluate a company which is still to scale up and it has a long, it has an ambitious plan? How do you underwrite and how do you kind of evaluate such companies? Because the business is meant to scale, but to scale up, it's a catch-22. You need that funding to come in, and you dilute equity, you may end up diluting a lot of equity.
Well, I think first, it should be, of course, no pre-revenue, no pre-tax situation. It should be generating some cash. That's number one. Number two, I think we look at the order book and the EBITDA. If the EBITDA is positive, and I don't mean, please don't come up with adjusted EBITDAs because that's nothing but a myth. Please show real numbers. Please show numbers where you have an order book, because as lenders, like I said before, we look at our DSCR. If you are able to, coverage my debt and it's at a healthy 1.3, 1.4 level, I think then I don't expect crazy IRRs, let's be honest. I don't expect crazy NPV numbers. If you have an order book and your EBITDA is looking positive and you are in a state of generating positive revenue, if again, for us also, like then, I think to a certain extent, a unique IP makes a difference because the placement makes a difference. One of the questions I think that I read was, if you have to be, proven in the Indian market to grow to the global market. I don't think that's true anymore. I don't think that's true anymore. We have another company here called Satshore. They have done that. Let's talk about downstream for a bit. Let's talk about value-added services. VAS is a field where India is still figuring out how they will consume that data. Because VAS entails actionable insights. Those actionable insights in a lot of other sectors, when we did our study for value-added services and for software as a service, the CAGRs in maritime, the CAGR in environment, and in finance are over 12%. There are countries, there are organizations that are already, understanding how they will be using these actionable insights. So you can always find, if your product is special, you can always find, a market outside India. Nobody's stopping you. So if you have a stable order book, long gestation order book, you have good amount of revenue coming in the future, and you can show me that proof. I think, because see, when I fund an infrastructure project, when I fund an airport, when I fund a metro project, there is a certain charge because it's a tangible asset. Where is the tangibility here? If it's not a ground segment, it's all up in the air. The only way for me to securitize is your cash flows. So they need to be in a stable form.
Are there any examples that you can cite, we're not mentioning the names, but kind of companies at this stage which you have funded?
Well, we've not funded anything so far, but with the EOPPP coming in, that's I think why, as a lender, as a project finance person, we are looking at newer schemes. You almost have read about technology adoption fund. That's been prepared by me and my team along with Investt. TAF is an excellent opportunity for companies which are at TRL 6 and TRL 7, which have to go to POC stage. We are, as government, as enablers, trying to make sure that we handhold. I think Manan made a very good point about the gap. That gap needs to be bridged, and that gap needs to be bridged either by the government becoming a demand creator or the government putting in instruments like viability gap funding, like long-term interest-free loans, etc.
Just in terms of leaving the floor open for the participants to raise any questions, before that, just another question, which is Manan and Girish, both of you. When you are investing in Indian companies, is there a possibility that you see more and more that they are actually suitable for being acquired in a strategic manner? You touched upon it earlier. Do you see that as, do you underwrite that as a possibility when you are investing in companies in the space tech segment?
Not just acquisition. This entire space tech spectrum is still so unexplored. when you are creating a meaningful IP or a meaningful business out of it, you have no idea how huge the demand would be for that stock in the public market. So it's not just from an M&A perspective that we look for an exit. We are firm believers that all these investments we make are actually on path to IPO. If not, of course, if a commercial viability becomes a challenge, M&A route is always there if the technology is meaningful and novel enough. But just having the M&A route as your only option of exit, I don't think that's really a part of our belief.
Maybe that is not maybe put the question differently. Do you see strategic interest coming into Indian companies?
For sure.
Okay.
Right from the Europeans to Americans, the legacy players, we know all the names. There is a huge interest from all of them for acquisition. But of course, if you know that there is so much value yet to be unlocked and founders can actually make it happen, why would you want to sell?
Girish, do you see that interest is really into Indian companies more as a cost arbitrage, or do you genuinely see companies appreciating the technology upgradation also happening in Indian companies?
Yeah, so it's a bit of both. I think there is definitely cost arbitrage, but there is also, acquisitions happening to fill clearly identified gaps in their product portfolios. If I'm doing something and there is an upstream, downstream opportunity that I can strategically acquire and make my production facility more efficient or what you have, people are willing to look at all that stuff. There is and rightly so, because at the end of the day it's a commercial world out there, right? You would, as a large player, want to build moat around your product portfolio, acquire IP, which kind of strengthens your position in the marketplace, etc. So it's a bit of both. And as far as we are concerned, we've done some 10 exits in the last 4-5 years. Pretty much equally spread between secondaries and strategics. And most of the strategics were essentially around filling that identified gap.
If I may add one.
Please.
We just mentioned that if you are filling a meaningful gap for a legacy player, there will be interest for acquisition. Bang on. We are actually seeing a lot of interest from European and American CVCs for these space tech startups in the country, which is actually a precursor to them coming in as an acquirer.
Yeah.
This is just them testing the waters, familiarizing themselves with the market, with the ecosystem within the market, and the logical conclusion is for them to just acquire the entire thing. So everyone has their eyes stuck on the Indian space tech market for sure.
It's a good thing because like in the aerospace defense segment, which we have seen, M&As sometimes, as Girish was also mentioning earlier, they get caught up in the realm of what the government is sensitive to allowing and not allowing. It may be falling under FDI, it may be falling under 74%, but still there are practical cases where they do not want foreign companies to own Indian companies beyond a certain percentage. Unlike that, in the space tech segment at least, it looks from the initial stage right now that it is more amenable and open to global investments happening there, rather than unlike in the aerospace and defense segment. Just moving on to one other theme. There is, when you look at space tech as a segment, and this is to all of you, I just wanted to understand, do you see the convergence with other sectors as real? Like, for example, we were talking to a private equity investor, Manan, and the idea was, okay, can you identify opportunities which are not just addressing space, but is there a convergence between telecom and space? Or is there a convergence between a couple of other sectors which people often talk about in related terms? So do you see that as an opportunity theme? Well, maybe too early, but is there a theme like that to be looked at?
Yes. So there are startups that are looking to solve for, let's say, communication both at a terrestrial and at a space level. And space is just an extension of the mode of communication. It's faster, less obstruction, more secure. But talking about also the dual use, people doing not just one thing in space, maybe defense, maybe something else. So space, Akshant would know this the best because I heard that they are trying to get space tech acknowledged as an infrastructure in the country. So that actually opens the way for space tech to be the enabler for so many other things. You see, pharma today is looking at space tech as well for zero gravity manufacturing, so critical, very high value drugs for oncology, for different things. Zero gravity manufacturing has never been tested at a commercial level before. So space is what is going to enable that.
Interesting that you mentioned that because we had invested in a Israeli company back in 2015. It folded up. It's a different issue, but they were basically trying to do zero gravity, as you said, for pharma companies to test their products because the underlying thought process was that if you test it in zero gravity, then in a walking human being, a sleeping human being, that's much more proven. If you can prove yourself there. The company did not get the next round.
Yeah, that becomes the holy grail. That if you can do it there, you can do
it here. Interesting. But the reason I was asking is we are working with a company which is addressing both the telecom segment, which is telecom in the context of defense applications, the government, ORAN and other systems, and as well as in the space sector.
So I'll give you an interesting example. And this is Sarjeet, this is not Exec. So we invested in a company which was essentially building a platform to manage GIS data more efficiently. Okay. So that investment we did, and then we invested in a space company which was basically doing usually second stage launch vehicles. And then we ended up investing in a company which is building a solution for agri, for large contract farmers to use space data captured from satellites, etc., multiple payloads, spectrums, etc., to do more efficient farming, intervention and etc. And this is, as I said, just by chance that this has happened. So now I'm thinking that since I have a launch company in the portfolio, I have a GIS company in the portfolio, I have an analytics company in the portfolio, should I also now start to look at a payload company? And close the loop. And it could be interesting actually, come to think of it, right? That you, within the portfolio, you have the whole, whole ecosystem kind of captured in some form. And maybe, with a payload company, maybe it could be a zero gravity manufacturing company, because that's also pretty right. So interesting things have emerged in the last 3 years as the ecosystem has matured, and therein lies the option.
On one hand, we want to
just make a point. I think Manan mentioned that, and I wanted to speak about it also. Space is critical infrastructure. This has been already documented by the United States space policy, if you read that, in Trump's last term. And rightly so, I think we should have been the one to come up with the solution of Starlink, actually, because telecom is already registered in the harmonized list of infrastructure. For those of you who don't know, Department of Economic Affairs and the Ministry of Finance publishes a list of harmonized list of infrastructure that has urban transport, roads, energy, electric vehicle manufacturing, even data centers. And that keeps updating every year. So we've already made an initiative from our end to our ministry, to the FM, that in the next budget, hopefully, space, launch vehicle manufacturing and satellite manufacturing and ground segments would get the harmonized infra categorization. And that is critical because our national security, we all know what happened 2 months ago, our data security and our needs are dependent. So it's extremely crucial, and that enables banks to step in. That enables all ministries to categorize around it, and it creates an ecosystem.
It kind of galvanizes the sector. True. Would like to open the meeting for participants to have questions, please. Can you please get in mic? I think first you rightly mentioned that space will require, in order to do international business, you require a really good quality product. And The other thing is that upstream projects or products in space are quite expensive. And there is a word going around that the Indian VC community does not have the appetite to make enough of an investment like international VCs might, for these high-end products.
So there is clearly a question of maturity of the ecosystem. If I were to step back and see, the kind of fundraise that happens in the valley, for example, for a company, a similar company in India will probably be raising money at that valuation. You understand what I'm saying, right? If that company is raising 5 million or 20 million in the valley, in India it will probably raise it at a 5 million valuation, $1.5 million. Because that is truly the cost of doing great technology work in India. That labor arbitrage that I alluded to is for real. And that is the reason why there is a lot of interest coming in from even global investors now to say that maybe the India deep tech product, the time is arrived.
I agree that the labor arbitrage is good, but in terms of the materials, it's not quite good.
I agree, and there is still a lot of work to be done there, and the government also realizes it. The China Plus One strategy that has been put into play for the last 3 years, results of that will now start to come through in the next few years. Till 2 years we were exporting zero Apple product from India. Last year we did some $20 billion worth of it. So it's a slow progress, but we are moving in the right direction. It's a question of just picking up the momentum to get there faster. We will definitely get there cheaper.
I think I would just like to add to what Girish is saying. If you look at the ecosystem in terms of the appetite, valuation comes later. First, there's the appetite to invest in early stage companies. If you look at family offices and the number of family offices that have been created over the last 10 years in India, I think the entire cycle of first the markets valuing existing businesses and cashing those, creating liquidity, setting up family offices, then first investing in debt products which are more comfortable for them, then going into equity, and then finally going into VC and PE. So if you look at the last 10 years, it's taken a time, but it has now reached a stage where every family office allocates some investment for early stage. Right? It was early difficult, even for private equity investors, it was difficult to raise money from family business. Today, I know a fund which is about 2,500 crores, and only 10% of that has been raised from abroad. 90% of that has been through family offices.
So we have 3 funds. Okay? My average deployment from India is 89%. 89% of the capital that I have raised in the last 13 years has been domestic. And if you step back and see how the ecosystem has evolved globally, unless this capital has not been domestic, the country has not taken that leap forward. So that understanding today is there, and I've been investing for 13 years now. When I started, there were probably 200 angel investors in the country. Today there might be 20,000 in India. And that's how that risk capital has come. The frothiness that we see in the public markets, a lot of that money will come back into private markets, into early stage. Because the viability of the asset class today is not a question. People have made boatloads of money in the last 10 years, actually, by investing in early stage, deep tech product, commercial, consumer opportunities.
Just being conscious of time, but this is an example which I never stopped saying. This is as you said, there's a overwhelming kind of FOMO today to invest anything into with deep tech. Some of the family offices I've seen. We had a situation, I was taking a flight at around 7 o'clock in the evening. We got from one of these angel networks, we got a deal and studied AI, ML, data analytics. I landed at 9:30, around 9:30 I landed, and I said, what's happening? I just want to speak to the person in the angel network to see what this deal is about. He said, don't you know it's closed?
I have seen people actually waiting and saying fastest finger first to subscribe to a 2 crore round because it will open at 9 and by 9:00, within 30 seconds it will be oversubscribed by 10 times.
And literally it was like 1.5 million round, getting closed in 2 hours. And I said, now it's the time to be cautious. But yeah, sorry.
So we are safe to say that Space Tech has become the new concert. We want a ticket of old tickets.
Any other questions, please? I think I see two hands. Yeah. Please go ahead.
Hi, good afternoon. My name is Yash. I'm a boutique investment banker in quick survey with few of my VC friends, right, to understand what's next that they are looking at in terms of investing in the space tech segment. And I was really surprised to see that almost 70% of the responses suggested that they are looking to invest in Earth observation, imagery, and downstream applications. So I'm just my question is there a balance between commercialization and generating the returns as a VC, more convenient in downstream applications, and is that something that you would want to consider?
So downstream application is definitely easier, because you are not literally capturing the data. You are depending on somebody else to give you that data and then the analytics on top. So it's definitely easier, cheaper. But at the end of the day, it gets very quickly commoditized also, because there is no entry level. What I can do, 3 people sitting in a garage can do it. Right? So you have to wait to say, am I creating any IP, any differentiated product which will give me the right to win in a highly commoditized market. That's the challenge. Having this question around services and products. The services piece is that challenge. One, it is really scalable. Two, because it is services, you can put people more technology, you can build it bigger, cheaper, faster, and therefore there is the moat. I think that's the lens that one needs to evaluate look at some of these options.
I think there's one last question.
Thank you.
Two questions in fact.
Hello. Yeah, I'm Dr. Martin Shah from Center for Aircraft Studies. I'm a research fellow. I work on outer space diplomacy and security. I also work on the media aspect, media and outer space. I want to know that regarding industry, how much the industry is ready to come up with projects with people who want to work in space journalism. Because we see over the years in United States, a lot of literature, mass culture, pop culture has been revolved around outer space. Like Star Wars, Star Trek. India does not have that kind of ecosystem as yet. Although we have got some OTT shows and films and movies made on outer space, but how much the industry is ready to invest in that segment? Thank you.
To create a pop culture out of something, I don't think it's really our focus area.
You could be a popcorn and create a lavoo and do $1 billion
For sure, and there are enough VCs in the country willing to invest in that, because that's more on the entertainment and information side. But talking about the Star Wars, Star Trek culture, it's a function, I believe, of the society that we are in. For us, it may not be applicable what was cool in the 70s and 80s in USA. I think that thing is not even cool in the States these days. So we as a civilization, as humanity, have progressed further. Something else is cool today, difference of generation as well. But you're right, India lacks space journalism by and large. See, there are enough podcasts, enough information coming out of US and Europe. Even our Indian founders are doing enough interactions with them, but there is a dearth of, there's a dearth of talent looking to cover space tech as, as a segment for journalism. But I mean, personally, I don't know. I don't have the answer how to solve for that.
But Mr. if you have somebody looking at doing that, let us know. I think the gentleman behind you, sorry, last question.
Hi, George Wyman. I'm from a US-based family office, and I also represent a couple of larger firms as a venture partner. I'm going to answer a question for him. If you've got a good idea, then go be the entrepreneur, because that's what it's all about. We just identified an unmet need. So, my question to the panel is that, so I was just on the biotechnology panel an hour before, and I was very enthusiastic with my fellow panelists and what it meant in terms of India beginning to engage in microgravity exploration. I personally see that that's a huge opportunity for India, because while the United States and other countries have invested decades in that area, they haven't quite cracked the nut of how to commercialize it yet. And only recently are we starting to get a venture capital industry targeting that area. Yet, the ability to manipulate gravity for the benefit of chemistry, physics, and biology affects so many different industries. It would take too long to mention. Even microchips and others are starting to see fundamental benefits from being able to work in a microgravity environment. So my question is to the panel. There are certain things that India is doing today that are playing on the same field as all the other kind of global competitors in somewhat established markets. There's an old adage of, some of the best sports people say, they ask the question, why are you the best hockey player or the best basketball player? It's like, well, I go to where the ball's going, not where it is. And so my question is, how does India, or how do you predict where the ball is going and then invest into that future? And how can the government or other institutions help rally the focus to give and create the necessary clusters for that to be successful?
So let me give it a shot. Okay. So the latter part of the question is that clearly the government has identified that there is an opportunity here, and there is a fund called InSpace that has been set up. They're actually also setting up an alternate launch, capability in southern India, in Tamil Nadu actually, and some of the companies that we work with have also already been allocated land there, and the work has already started to build some of those launch pads. Okay, so that's the second part of your question. The first part of your question, I think there is enough primary and secondary research today to kind of predict where all this is heading. Okay, and therefore, and there are enough experts out there that one has access to validate some of the stuff when it comes to us from an investment perspective. So I have about 400 investors across the 3 funds, and about maybe 8 or 9 of them have been involved with space for the last 30 years in multiple parts of the world. And therefore they become a natural, sounding board for us when we get to see some of these opportunities which are literally leading edge and trying to, do innovations which are unheard of using, the scientific principles that are proven for many decades now. And that kind of helps us to build conviction, and typically at the stage at which we come in, which is first round of institutional capital, the exposure we have is limited. And therefore, if they are directionally moving in the right place, we are happy to double down and continue to add to that. Does that answer your question?
Yes, to some degree, but I know the other gentleman wants to comment. So.
Yeah, so I think I'll take the second part of George's question. I think he asked a very good question. So yeah, George, I think we know where the ball has been, but we're a very large country and we should start predicting where it's going. I agree with you there. Because like I think Sir mentioned very clearly, we have taken certain initiatives in that zone. We are creating a new launch pad, new organizations are coming in the upstream section. But I think I addressed this in the earlier part when he spoke about geopolitical block and multi-block. It's time to look at partnerships. It's time to look at India should become a multi-block partner association. We are a large country, huge consumer base, and it's time to start leveraging that. It's time to stop predicting where the ball is going on the Western front, but start making our own trajectories. So transfer of technology, having international collaborations, are definitely the way forward. Doing things indigenously all by ourselves will take decades. So I think there's already a focus area. I hope that's in some way answers the question.
I just want to attempt answering the first part for him. So, innovation in space tech, like innovation in NVIDIA. Space tech is just one of the things we do at GROWX. But, the science behind innovation, the method behind the madness is the same. So just like you are trying to predict what's going to happen next in any other sector, you can do that even in space tech if you are glued into the ecosystem, if you are tracking the developments, and if you understand the market, even at a high level, you can make sense of where things are going, and then it's, I think, just basic human intelligence that helps you predict anything like you would predict anything, right? There is no science behind innovating the future, predicting the future in space tech vis-a-vis predicting the future in semiconductors, in defense tech, and electric mobility. Yeah. So I think the guiding principles remain the same for all of us. It's just that you apply it in a different way based on your experience, your understanding, and your passion. I'm sure Girish here would agree with me that we are passionate about what we are doing at the end of the day, and that is what is driving the success, whatever we get out of this. I hope that answers the first part of your question.
Actually, just one concluding point. With this event that we are having today, and I was speaking to Rajesh, that if you go back 5 years, and if you were to try and hold an event like this, probably the audience would be, you don't have multiple halls, you probably have one hall, and try to fill in that capacity. I think the interest in space sector as a sector and the opportunities which are coming in is just getting reflected by the number of people that are here and the kind of audience that you are seeing, not only in India, but from abroad. I think that kind of summarizes the opportunities in the space sector.
Wow, that was indeed quite a thought-provoking session. And now I would ask somebody we have Sakshi from SIA-INDIA to present token of memento from SIA-INDIA. Thank you so much, gentlemen. That was indeed a great one, investing in India's space boom. And we'll break out another round of networking session. Maybe a couple of questions can be taken offline during this. And we'll just cut short the tea break for another 15 minutes. And we'll meet again for the next session. Thank you. Can we also have another group photo, please, for the session? One group photo, please. Can we have another round of applause for this amazing session? Thank you so much, gentlemen. Thank you.